Bitcoin trend, 10 to 14 February 2025. Stay focused on breaking even. Next week's data. Let's break down next week's data. Monday, 10th of February 2025, UTC +7. China's M1 money supply. The key to China's improving economy is the rise of M1. It has started to go up, but not significantly yet. Once it rises, it will keep going. If M1 goes up, Bitcoin will also rise. Why? Because M1 represents cash and short-term deposits in circulation. M2 has increased, but if M1 doesn't, it means there isn't more cash in circulation. No US data on Monday. Here's what the candle might look like. But remember, this is only valid if China releases the data on time. They often delay it, which is frustrating. Tuesday, 11th of February 2025. No major data, but Powell is giving a speech. Time unknown. China is delaying its stimulus because it doesn't want its liquidity drained by the US. Meanwhile, the US is imposing tariffs to prevent its own liquidity from being drained. Now that barriers are up, what's stopping stimulus from being released? Here's what the Tuesday candle might look like. My drawing shows a dip, but I actually expect a wick, similar to Saturday's movement. Wednesday, 12th of February 2025. USIFTI UT +7. Japan's M3 money supply. If Japan's M3 supply rises, inflation increases, which is what Japan wants after years of deflation. Their target is 2% inflation. Japan also announced a $1 trillion investment in the US, meaning they will buy more US Treasury bonds, pushing the DXY higher. If Japan invests in the US, America will allow its liquidity to be drained by Japan. Why? Because Japan is under US influence. The US can pull liquidity from Japan anytime since Japan holds the most US treasuries. Unlike China, Japan can't fight back. If the yen strengthens, Bitcoin will rise because inflation fuels Bitcoin's growth. 2030 UTC +7 US CPI inflation data. Factory spending, PMI, is up, but factory orders are down. Consumer spending, durable goods orders, is down, and job openings, JOLTS, have dropped. Weirdly, private employment, ADP, is up, but NFP is crashing. This suggests that inflation unmatched could spike to 4.3%. Inflation will likely be reported as rising, which will push Bitcoin up. A drop in NFP means fewer people are holding dollars. If they aren't, who will bear the cost of inflation in a struggling US economy? NFP proves that ADP data is unreliable. Here's what the Wednesday candle might look like. Thursday, 13th of February 2025. 2030 UT7 US PPI Producer Price Index. The Fed's preferred inflation index is PPI, not CPI. If CPI rises, PPI will follow. A rise in PPI suggests the economy is still active, but if it goes up too much, the Fed may need to tighten policy. But can they do that with interest rates still at 4.5%? Nope. CPI measures inflation from the buyer's side, while PPI looks at it from the seller's perspective. Here's what the Thursday candle might look like. My chart shows a drop, but it's not a deep correction, just a wick forming. Friday, 4th of February 2025. 2030 UTC +7 US retail sales. To predict February's inflation, reported in March, we first need to check retail sales. This measures how much Americans are spending. If retail sales rise, the economy looks strong, pushing DXY up. In the US, 60% of spending is on cards, 40% is cash. Forget cash, it's untraceable. Banks analyze card transactions. Retail sales is my first clue for predicting inflation. I expect it to drop because inflation is up, total employment, NFP, is down, job openings, JOLTS, are down, factory orders are down, consumer spending on durable goods is down. If retail sales somehow increase, where is the money coming from? If retail sales go up, DXY will fall. If retail sales drop, DXY will rise, not because of economic strength, but because investors fear inflation and move to US bonds. Here's what the Friday candle might look like. Thanks for reading my article. Remember, buying and selling are personal decisions. If you lose money, blaming my analysis won't get it back. Relying on my predictions is a mistake. I've been wrong many times, proving that I'm just like any other trader, guessing. If I'm right, it's luck. If I'm wrong, that's expected. Always do your own research, but never fully trust it either. Analysis is just entertainment. Disclaimer: crypto investments carry high risks. Any decisions you make based on this analysis are entirely your responsibility. No government or regulatory body is liable for your investment losses.